Welcome to lesson 4. We're talking about investment accounts. This is Investing 101. I'm excited to be here with you today, and I want to talk to you about the types of investment accounts that you can open, that you can use to put vehicles in there to help you grow your wealth. I'll break all that down for you, of course, all right? Guys, welcome to class, welcome to our course, all right? By the end of this lesson, I want you to be able to understand the various types of investment accounts available to you, all right? Including brokerage accounts, tax advantage accounts, retirement accounts, and other types of accounts that we have access to. And I want you to know how to choose the right account for your investment needs, all right? So let's get started. First, we have brokerage accounts. Everyone's heard of a brokerage account. Everyone has maybe used a brokerage account, but I say that being in the investment business. That's why this course is going on. Most people have not used a brokerage account. Most people haven't opened one, don't know what one is. A brokerage account is simply a platform, a entity that allows you to buy and sell different types of investments. What you'll have is an account at a broker, and you will be able to purchase a wide range of investing vehicles like stocks and bonds and mutual funds and ETFs. It runs the gamut. Anything you generally want, what your broker may allow you to hold in that account, it really does run the gamut. But let me just start with the basics, guys, because the basics can actually get pretty complex. So you can hold individual stocks, right? You want to buy Apple, want to buy Google, go ahead. They'll sit right in your brokerage account. You want to buy a bond, you want to buy a 2040 bond from IBM, it'll sit in your brokerage account, all right? You want to buy a mutual fund from Vanguard, fine, you can buy that too. You want to buy ETF from BlackRock, you can buy that too. But again, it gets complex, right? What does a brokerage account do? That's what it does. It holds securities. Now, you don't necessarily need a brokerage account to hold investments, all right? Because usually what you're going to have in a brokerage account are different options and tools available to you to trade stock. Whereas though in a mutual fund account, you don't necessarily need that because you're not trading mutual funds. You're investing for the long term, and you can buy and sell them, but there's no trading happening, all right? So you have taxable versus tax advantaged accounts. Most people understand them to be retirement accounts versus non-retirement accounts, all right? But what we've tried to do in the industry is come up with names that are more descriptive, right? Not an individual account, but a taxable account, all right? Not a retirement or tax deferred account, but a tax advantaged account. Because guess what? There are some retirement accounts that are tax deferred, and there are some retirement accounts that are tax free. We have to understand and be able to differentiate between the two things, between the two accounts, all right? So when you think about taxable accounts, that would be an account that you already have paid the taxes on the money that you're going to put in that account, right? And that's most accounts. You put money in a bank account, that money has already been taxed. There's no tax when you pull it out. But in a tax advantaged account, there's a trade-off, right? Let's say in a traditional IRA, you go and put money in, well, you would then get a tax deduction, right? Because you don't pay tax on that money right now, and you would invest that money. But when you pull that money out, you would then have to pay tax on the money that comes out, all right? So we're gonna get into all of that. We're gonna talk about the different tax implications of each account type, including capital gains, income taxes, and other taxes that you might have liability for, okay? Now, what are the common tax advantaged accounts? Tax advantage just means that it's more advantageous than investing in a taxable account, a normal account, all right? So tax advantage accounts are what we call individual retirement accounts. You may have heard of a Roth IRA. You may have heard of a traditional IRA. We have 401ks, 403bs, and all the other fours, right? 457s and other different types of tax benefits that you can get from investing in different types of accounts, all right? 403bs, 401ks, 457s, simple and SEP IRAs, those are going to be accounts that you generally get through your employer. Your employer has the benefit or gives you the benefit, but employers can structure and set up retirement accounts for their employees, all right? Different than what we have seen in the past historically in pension defined benefit accounts where the employer invests for you and pays you after you leave to have a good life in retirement. Here is a defined contribution account that your employer would set up and allow you to invest in. You would then be able to direct your own investments and direct your own contributions, where your employers will sometimes match your contributions to encourage you to invest for retirement. And then there are different tax deductions and benefits and deferred growth that you can take advantage of based on the type of account. All right, so we can get into the weeds there if we want. Jump in. We may have to do a lesson 4 part 2 to answer any questions about the different types of accounts, because what I understand and what I am conscious of is that I do this every day. I've been doing it for over 20 years, and talking about different accounts is second nature to me, but just thinking about what goes in a brokerage account can be complex. So I want to help you understand those things. And I want to help you choose the right account, okay? I want this course, this video, to provide some guidance to you on how to select the appropriate investment account based on your individual financial goals, based on your tax situation, and based on your investment horizon, all right? I can help you in a general way. If you need more help, I'm going to say you're going to need some one-on-one help because you have a unique situation that you need advice on. So I'll be able to help you with that too. Get in contact with me through email, through DM, or through my website, birdbrand.net. You certainly will be able to find that link in the description below. All right. So when you think about what type of an account you're looking for, different accounts are available, and there may be scenarios where one account type may be more suitable for another, or you could use both accounts together in tandem. So again, all of that is up to your individual circumstance. All right. Now, let's get into talking about fees and cost. Investment cost and managing cost is so important in your overall objectives and goals, because if you don't manage your cost, then what you'll realize is that your cost will eat up a lot of your returns, will eat up a lot of the inflation protection or purchasing power that you have. And it's unnecessary in this day and age to pay large amounts of money for managers to invest assets. Index funds are very popular because they capture the returns of a market with little to no risk outside of the market risk, but you're just capturing the returns. Active managers are trying to say beat a market. So if a market returns 10%, an active manager not only wants to return that, but they want to return more than that index did and cover their fees. So you got to imagine the hurdle that active managers have to get over. And what is an active manager? An active manager is someone who simply selects investments that has a benchmark. Let's say you choose a benchmark so that you can have something appropriate to compare it to, but they're trying to say beat that benchmark by a certain amount, covering not only their fee, but give you something over and above what that index gave you, or you would just buy the index. So it's very difficult to do, all right? And fees will basically eat into that return if they are too high. And then with other accounts, now account level fees You might have some small account level fees if you have a small account, but a large account, you really don't have to worry about account level fees. Surely you have to worry about trading costs, other things like mutual fund expense ratios, admin fees, trading cost and commissions. So you're going to have a certain amount of expenses associated with an investment account, especially a stock investment account. You're going to have to pay to trade, all right? Because someone has to be there to settle your trades, execute your trades, and make sure everything is right with that. So this lesson is designed to help you understand different types of investment accounts that you can use to invest your assets and buy investment vehicles to put in your account. And what I also want to do is have a breakout session and talk about account comparisons. First, we're going to have you research and compare the features and benefits and tax implications of different investment accounts such as IRAs, 401ks, and say a taxable brokerage account. We're going to have you do that. I'm going to have you say, create a video or send an email, or let's get right into the discussion group. Also, let's take a look at fees. Guys, I want you to find and compare the fee structures of different brokerage firms. All right, what does E-Trade versus Robinhood cost to you, the investor? And I want to think about having you emphasize finding low-cost investing options. All right. Also, what we're going to do is a hypothetical account selection scenario. We're going to talk about a hypothetical financial scenario, and I'm going to ask you to recommend the most suitable type of investment account for this hypothetical individual's needs. And this would help you then start to understand your own needs and your own profile. So that way, when you have to go and find a brokerage firm to buy stock, you know what you're looking for. And that's what I've designed this course for. I've designed this course so that when you go to the market, you are no longer a complete novice, all right? You may not be an expert, but you are not a novice investor. And that's what I hope for you. That's what I want for you. And through these videos and through this course, I want you to become comfortable with discussing investment topics, looking at investment data, and looking at investment vehicles and investment accounts, and being able to make a good decision for you, and being able to speak to a professional with a knowledge base that you can then lean on. And certainly with me in your corner, you can also access me to bounce anything off of. So links are in the description below. I would ask you all to, and I'll do this as well in the discussion, to suggest any online resources or guides you find in your journey so that we can all use them. All right, guys. And I will also give you some ideas in a future video of some reputable brokerage firms or financial institutions where you can open an account. But I don't want to do that yet until you do some research, okay? Now, for homework in this lesson, I'm going to ask you to create a fictional investment plan for yourself, something that you're willing to share and discuss, all right? Plus, I want you to include the types of accounts that you would use and the investments that you would choose to go into those accounts based on your financial goals, all right? And then by the end of this entire lesson, guys, I want you to be familiar with various investment account options, what's available to you, all right? I want you to understand the tax implications of different types of accounts, especially the difference between taxable and tax advantaged accounts. And ultimately, at the end of this lesson, I want you to be on the pathway to be able to make informed decisions about the types of accounts that align with your investment objectives. All right, guys, this knowledge is so crucial and so essential for setting up your investment journey and doing it all effectively. We're going to be talking about this in different subsequent lessons. and I want you to stay tuned. All right, guys, I am excited to be here today. I'm excited to be giving you this course and doing this video. Please like, subscribe, engage with me, because it is very encouraging to not only myself, but to your classmates. All right, guys, I'll see you in the next video.